1. CoreWeave's $9 billion core scientific acquisition, AI infrastructure game changer. 2. CoreWeave acquires Core Scientific, $9 billion crypto to AI data center play. 3. House preps for Crypto Week. Core Scientific tumbles. Bit Digital ditches Bitcoin. 1. CoreWeave's $9 billion core scientific acquisition, AI infrastructure game changer. A $9 billion merger is shaking up the AI infrastructure world. CoreWeave, a leading cloud infrastructure company focused on artificial intelligence, is making headlines with its all-stock acquisition of Core Scientific, a prominent data center infrastructure provider. But here's where it gets interesting. The deal has sparked controversy, with some investors questioning the true value of the merger. CoreWeave's stock took a 3% hit on the news, while Core Scientific's shares plummeted nearly 18%. However, both companies saw a surge in June when rumors of the acquisition began circulating. According to CoreWeave's CEO Intrator, the market just needs time to understand the value proposition behind the deal. The acquisition is expected to eliminate a whopping $10 billion in future lease obligations and significantly boost operating efficiency. Intrator explained that this move means we're not paying rent, right, for the next 15 years. The transaction is anticipated to close in the fourth quarter of 2025, subject to regulatory and shareholder approval. This merger expands CoreWeave's access to power and real estate, granting ownership of 1.3 gigawatts of gross capacity across Core Scientific's U.S. data center footprint, with an additional gigawatt available for future growth. Of Core Scientific's 1.3 gigawatts, 840 megawatts are allocated to CoreWeave's contracts at 5 locations. After the deal closes, CoreWeave can choose to divest Core Scientific's cryptocurrency mining business or repurpose it for AI workloads. Intrator highlighted that the company has already undergone a conversion process with Galaxy Digital, making the transition smoother. The acquisition also opens up opportunities for CoreWeave to pursue investments from infrastructure-oriented vehicles, potentially lowering its cost of capital. As of March 31st, CoreWeave's weighted average rate on its short-term debt stood at 10.1%. Core Scientific has been shifting its focus towards high-performance compute workloads since emerging from bankruptcy in 2024. The company employs over 300 people and has been working with CoreWeave since 2018. CoreWeave went public in March, and despite Monday's pullback, its shares are now worth 4 times more than they were during its initial public offering. When CoreWeave began working on AI infrastructure, some advised building its own data centers, but Intrator noted that it would have been a tough sell to investors at the time. Now, as a public company with nearly $1 billion in quarterly revenue, CoreWeave is constructing its own data centers while competing with major cloud infrastructure providers like Amazon Web Services. Shareholders of Core Scientific will receive 0.1235 CoreWeave shares for each share they hold, implying a $20.40 per share valuation and a 66% premium to Core Scientific's closing stock price before deal talks were reported. After the deal closes, Core Scientific shareholders will own less than 10% of the combined company. This isn't the first time the two companies have considered merging. Last year, Core Scientific rejected CoreWeave's unsolicited offer to buy all outstanding shares. And this is the part most people miss: the potential implications of this deal on the AI infrastructure landscape. Will this merger give CoreWeave a competitive edge, or will it create new challenges? We want to hear from you. Do you think this acquisition will pay off for CoreWeave, or are there potential pitfalls that could impact its success? 2. CoreWeave acquires Core Scientific, $9 billion crypto to AI data center play. In a bold move that's shaking up the data center landscape, CoreWeave, a cloud computing platform backed by NVIDIA, has announced its intention to acquire Core Scientific, a crypto mining company, in a staggering $9 billion all-stock deal. This announcement, made on Monday, marks a significant pivot in the tech world as CoreWeave aims to harness the energy and data center capacity that Core Scientific has amassed during the crypto boom. But here's where it gets controversial. How exactly will a crypto mining firm supercharge a cloud computing platform? The crux of this deal lies in the pressing need for AI companies to expand their computing infrastructure, as reported by Reuters. Amidst this burgeoning demand, the energy-intensive sites and power contracts established by Bitcoin miners during the crypto boom have gained newfound relevance. The acquisition promises to eliminate over $10 billion in cumulative future lease overhead for CoreWeave, which would otherwise be paid for existing contractual sites over the next 12 years. The offer values Core Scientific at $20.40 per share, a premium of around 66% compared to its stock price before the deal was rumored in late June. Core Scientific shareholders will receive 0.1235 newly issued CoreWeave stock for each share they hold. Following the announcement, Core Scientific's shares dropped by 22% in morning trading, while Nvidia-backed CoreWeave saw a 4.5% decline. The deal is expected to close in the fourth quarter of this year, with the final price to be determined at that time. Setting the bar for Bitcoin miners, this acquisition is seen as a pivotal moment. Bitcoin miners have ventured beyond cryptocurrency, leasing power and data center space to meet the rising demand from AI workloads. Bernstein analyst Gautam Chugani told Reuters that this deal could set a precedent for Bitcoin miners looking to transition into AI, noting that power remains the biggest hurdle in AI data center expansion. CoreWeave's journey from a crypto mining firm to an AI powerhouse is noteworthy. Originally founded as an Ethereum-focused crypto miner in 2017, the company pivoted to AI a few years later, closing its mining business after Ethereum's 2022 upgrade. The merge reduced mining rewards. CoreWeave's revenue has surged, growing more than eightfold last year, according to Reuters. For Core Scientific, this deal represents a turnaround opportunity. The company filed for bankruptcy in late 2022 due to a steep drop in Bitcoin prices and rising energy costs. Emerging from bankruptcy in early 2024, Core Scientific, like many other Bitcoin miners, has been seeking ways to capitalize on the AI boom. Initially, Core Scientific declined CoreWeave's takeover offer in June 2024, citing it as significantly undervalued. However, the two companies later signed a series of 12-year contracts, including one where Core Scientific agreed to provide CoreWeave with about 200 megawatts of infrastructure to power its high-performance computing services. Advised by Goldman Sachs, CoreWeave offers access to data centers and Nvidia-powered AI chips, boasting a current market value of about $79 billion, according to Reuters. This acquisition not only highlights the evolving landscape of tech infrastructure but also raises intriguing questions. Will this trend of crypto firms pivoting to AI continue? How will this impact the future of data centers and AI development? We invite you to share your thoughts and opinions in the comments below. 3 House Preps for Crypto Week. Core Scientific tumbles. Bit Digital ditches Bitcoin. As we gear up for an exciting week in the world of cryptocurrency, significant shifts are taking place in the market. Core Scientific, a notable player in the crypto mining sector, is experiencing a sharp decline, while Bit Digital has made the bold decision to abandon Bitcoin altogether. It's essential to understand that the information provided by Investors Business Daily serves purely for educational and informational purposes. It should not be interpreted as an invitation, recommendation, or endorsement to buy or sell any securities. The data we share is sourced from what we consider reliable channels, yet we cannot assure you of its accuracy, timeliness, or appropriateness. This includes any information that may appear in closed captioning. Remember, past investment performances do not guarantee future results. Moreover, it's worth noting that the authors or presenters may hold shares in the stocks they discuss. We do not make any claims or guarantees regarding the wisdom of investing in specific securities or employing particular investment strategies. Please be aware that the information we provide can change without prior notice. For more details about our services, you can refer to our terms of use. Additionally, real-time pricing data is provided by Nasdaq Last Sale, but keep in mind that these quotes and trade prices may not be sourced from every market. Ownership information is supplied by LSEG, while estimate data comes from FactSet. The trademarks IBD, IBD Digital, IBD Live, IBD Weekly, Investors Business Daily, Leaderboard, MarketDM, MarketSurge, and others are owned by Investors Business Daily, LLC. Copyright 2025 Investors Business Daily, LLC. All rights reserved.